This is Gerardo Del Real with Resource Stock Digest. Joining me today is the CEO of Revival Gold, Mr. Hugh Agro, and the non-executive chairman, Miss Dianne Garrett. How are the two of you doing?
Very good, Gerardo.
Excellent.
Excited to be here at the 2019 Beaver Creek Precious Metal Summit. The setting is beautiful. The tone is very different from last year.
Indeed.
I would love to start with you, Dianne. You have a track record of serial success. You've seen bull markets, you've seen bear markets. I would love for you to talk about some of the past cycles because this most recent bear market has been absolutely brutal.
Very much so.
You've seen both. How does this last one compare to some of the previous ones that you've been involved in?
I would have to say that this past bear market is the worst that I've seen in my career. There's been a significant disconnect between the equities and the gold price. We've seen a lot of money escape the sector, and it's been very, very difficult to attract new money in. There's been some of the monies that are coming into, mostly the ETFs.
Right.
So we're seeing a very fundamental shift in the way investors want to invest in the space. So it's been one of the more difficult that we've seen.
With that being said, this sector is a very cyclical sector, and what, in my relatively little experience, 11 years in this space, right, I've seen that the longer the bottoming process takes, the more violent the upside is when we finally turn. And it looks like we finally have a supportive macro environment. Can you speak to some of the bull cycles that you've seen and what that looks like when we get in early before the mainstream really catches on? Because I think that's where we're at now.
I think you're right. And for forecasting markets, obviously my crystal ball is a little cloudy, so I caution my future statements with that. But no, this is looking very similar. What you don't want to see in a bull market is a rapid rise in commodity prices. You want to see the kind of gradual increase, a little bit of pullback, then a little bit of increase again. And that's exactly what we're seeing now. This is very, very similar to what we saw in the end of the 1990s and going into the early 2000s. And so we're starting to see a similar type trend. And I think this one, and you're absolutely right, the longer and the more painful the bear market is, the more robust and long is the bull market that soon follows. And I think we're setting ourselves up for an exact repeat, if not better, than the last bull market that we've had.
I love it. Hugh, all you've been able to do in a bear market is outline a 2 million ounce plus resource across all categories.
Yeah.
You're well on your way to 3 million ounces. You're advancing the metallurgical work, which is critical, I believe, at this point on the sulfide portion of those deposits. And you've now recently identified near surface oxide ounces at Arnett, which can possibly provide feed as a satellite deposit. Can we talk a bit about Revival and where we're at right now?
Yeah. It is always the case that the money's made on the entry into this business. And as Dianne pointed out, these are cycles we can't predetermine, but you sure can't tell when we hit a bottom. You can feel it, you can see it in the number of investors that are in the space, you can see it in the quality of the people that are in the space. In bull times, that all changes. We have everybody and their brother clamoring to get into the space, looking for a chair to sit on.
Sure.
And so what we've done with Revival Gold is over the last 3 years, through a lot of hard work by a lot of people, put together a fantastic investment vehicle for gold, and we've done it at exactly the right time in that bear market. And in terms of our milestones and our achievements through that bear cycle, I attribute that to the team we have. Starts at the top with our chairman and the experience and the abilities that she brings to bear, but it runs right through our team. We've got some folks who had a lot of experience with this project and with delivering on assets in tough times. We've been careful with our money. We spent our shareholder investments judiciously, and the results speak for themselves. As you point out, maiden resource in May 2018. We extended the strike a further kilometer in 2018 through the drilling we did that year. This year, we've continued to build on that. We've got RPA underway with an updated resource estimate. Will come out first quarter next year. And we're building on the oxide story at Bear Track, which has near-term potential given the infrastructure on site.
Let's talk about that infrastructure because that's also critical. It's something that when I was out to site, it was one of the first things I mentioned. I made a funny comment. I said, there's your market cap. It's sitting on the leach pads. Hugh recalls. And I got a little pushback, and this was several years ago. But now that's a part of this story. There is near-term production potential because of the infrastructure advantage. that Revival has?
It's a big differentiating feature when you think about companies to invest in, because the capital hurdle to get these projects going, let alone the permitting hurdle, are the things that stand in the way of smooth progress. And in our case, we've got a lot of baseline data. We've got a history of an operation that operated very, very well with no incidents, environmental instances or concerns. And we have the experience of that operation and the infrastructure that remains. So we've got all that going for us as we think about a restart of that plant at Bear Track.
Excellent. Dianne, I know you're very selective in the teams that you choose to associate yourself with. What excited you about Revival?
Well, I love the vision that Revival has. Hugh and I know each other from the past, so I have a lot of time and respect for Hugh. The model that they're following to go back and look at mines that were closed in low gold price environments that were past producers that still have a lot of upside potential, that's a model that not a lot of people pick up on and follow. So it's very similar to what I'd done with the former company, and I think it's a great model to follow. Listening to the vision and talking to Hugh and the team and getting to know them, I thought this is at the end of the day, it all comes down to people. If you have the right people who execute on the right disciplines and stick to their guns in the game of what we're trying to accomplish there, then you're going to be successful. I mean, it's all about the people, and they're going to make the asset successful. And so the team that Hugh has assembled is some of the best I've seen. The vision, the way they want to methodically go about unlocking the value of this asset is something that I think is a great opportunity for the asset, but for the management and the leadership and the vision that they have on the ground, and they're executing. And it's my pleasure really to be chairman and watch this and executing on every single goal that they set before them.
You mentioned that former company. I was following you back then, so I know how that ended. Can we speak about the incredible job that you did taking that from a development stage asset to raising the capital that you did to ultimately monetizing it to the benefit of shareholders? What was the exit price on that? Do you recall?
It was just shy of $700 million.
Just shy of $700 million. Hugh, what's the current market cap of Revival Gold?
Yeah, 35 million, and not far.
35 million.
And not far.
Clear, everybody got that.
And not far off the starting point for Remarkable.
We were 20 million market cap.
I remember.
It's really something that
I recall.
It's a lot of similarities.
Another testament to the team at Revival is how intact the share structure has been kept despite the bear market. Many exploration and development companies do an absolutely horrible job of blowing out their share structure during bear markets. And so when the market turns and we get a more favorable market, it really doesn't benefit shareholders because the share structure is so out of whack.
Right.
You've done a brilliant job of keeping that share structure intact. Can you break that down for us briefly?
Well, it starts with spending wisely, right? Making sure that what we're doing is geared towards near-term milestones for investors, and financing as we must do as an exploration development company at progressively higher prices. And we'll continue to do that. It's part of our pedigree. We're owners in the company. Our shareholder interests are our top priority when it comes to the company's strategic objectives.
Hugh, what can we expect in the next several quarters and in 2020? Because I think it's going to be a spectacular 2020.
Yeah, it's certainly shaping up to be a really good year for us. We're spending $4.2 million at Bear Track Arnett this year. We've released the initial results out of our programs at Bear Track Arnett. We've got another 15 holes to release from the Arnett area over the next 6 to 8 weeks. As you mentioned earlier, we're doing metallurgical testing, both on the mill material at Bear Track and the oxide material at Arnett. So we'll have those results out before the end of the year. We've run some regional programs to improve our understanding of the exploration targets more broadly on the property position. That includes geophysics, which we released about a month ago, but we're also doing a soil sample program through the property position, and we'll have that to help build our understanding of the geology and the exploration targets. We're permitting and revising permits in 4 different applications to add to our permitted areas for exploration. We've got some new target areas we want to get into next year, and so we're preparing for that. And finally, we're busy with this resource update I alluded to earlier. We have RPA engaged doing that work for us, and we'll have that result out beginning of next year.
Hugh, Dianne, thank you so much. Appreciate it.
Thank you. Appreciate it.